Welcome to the Safe Wheel live stream where I share my live accounts. I share my real P&L on 3 accounts, and I teach my proprietary Safe Wheel options trade system for free. And let's get into that. First, I want to have some of you or anyone type into the chat that you can hear me okay. I want to make sure my audio is working. And also, be sure to post any questions that you might have early on in the broadcast so I don't miss those and I don't shut the broadcast down before that ends. Before I get to your questions. All right. Audio's working. Thank you guys, Will and Horatio and Avery. Okay. So let's get started here. I'm going to talk about the earnings edge, what happened last week. Last week, I traded, what did I trade last week? AMD. Traded AMD. That one, I'd had profit for a while there, and kind of towards the end, it just kind of went flat. AMD just did not move much at all, really. I mean, it moved up, then down, then up, then down. So it ended up kind of back where I kind of bought it. So I lost $358 on that trade. And you can see my account balance, 9,353. So let's put that into the spreadsheet. Let's see how that's working out. So, oh yeah, here we go. AMD minus 358. You can see my record, 33.19.6. Since I did the latest change to the system, the update, 13.12.3. So about a 50-50 win rate with my average win at $908, average loss 443. And let's see, what was that balance? 9353. 9353. And what's SPY trading? SPY 457.43. 457.43. So we can compare it to the S&P 500. You can see it vastly outperformed in 2022, 2023 underperforming a little bit, but overall up 87% since I started trading this earnings edge live. And the S&P is only, well, I guess I should say only down 3.69% since the beginning of 2022. But, the S&P still hasn't come back to the end of 2021 yet in terms of, returns. It's not there yet. All right, so that's the earnings edge and what happened last week. Of course, the week before was Microsoft, made $1,100, so pretty good there. That was a good win. Microsoft's been the big winner. You can see that. Almost $4,000 just on Microsoft. Definitely going to have to keep using that one. But I think that's just an anomaly. Just happened to be a couple good winners. But I don't think that has any indication of really what's going to happen in the future with the earnings edge with it. Okay. Let's get to the Premier level 5. So Premier level 5, you can see my net liquidation balance. You won't see this anywhere else. 34,675. You might see that in a couple other places now that I've kind of put a little bit of pressure on some of these instructors. I think there might be one place you might see it, but 34,725. It didn't move much at all. About $3 from last week. So not a lot of movement on the Premier level 5. And you can see the record is 18 wins, 6 losses, 6 ties. We got 4 open trades right now. Since April 8th in the inception, you can see up 12 where the S&P down 6. And overall, PL5 up 15.75, where the S&P is up about 12% since April 8th of 2022. So you can see that the PL5 is still outperforming on a percentage basis, but on a risk adjusted basis, vastly outperforming. I think it's about 4 to 1 as far as the risk. It's about one fourth the risk. And that's the key to this Premier Level 5. That's why it's so good, I think, is because you just keep those drawdowns low. And when you do that, uh, you just have less of a jumping off point. Like you're not jumping out of a hole, right? When you're trying to make returns. And that really makes a difference. Okay. Let's talk about now the safe wheel. So we're going to get into the safe wheel now. Let's see here. You can see my account balance, $6,386. Started this with $5,000 in the beginning of 2022. So if you began the beginning of 2022 in the S&P 500, you're still down. Your $5,000 would be lower than $5,000. Okay. So let's talk about where we are with the safe wheel. I'm trading DKNG and I'm coming in here. And see, I haven't looked at this yet. I'm just looking at it right now for the first time today. Because when I first come in here, what I'm looking for is to see if I got assigned or to see if I own any shares, because that'll determine how I make my decisions. And I can see I do not own any shares. I own a put hedge here, 3, and I also own the call, which I rolled last Friday. So I know this is going to go until next Friday. So really everything, the safe part of this has been done. I just do the traditional wheel on Mondays. Let's take a look at one thing though. I want to check my put hedge to make sure that it's, there's two questions I ask myself. One, the days, is it under 100 days? Because if it is, it'll depreciate too fast. So it's 137. So that's good. And then my strike price, it's the $25 put, the strike. And when I compare that to $31.26, I'll just do a quick calculation to make sure that it's within 70%, right? So 31.23 times 0.7, 70% is 21.8. So it's 22. So as long as this right here was at 22, this strike, I would be within range, close enough to the price of DKNG to provide that protection. But we're at 25, so we're definitely within the range. So I don't need to do anything with the put hedge. So really all I need to do is just the traditional wheel at this point. And I'm going to go ahead and sell a put because I don't own any shares. I'm not going to write a covered call. And so I'm going to go into the nearest expiration, which looks like here is 4 days. It's going to be Friday. And I want to sell a put that's out of the money, but also is over 1% of the price. So 31.21. So it's got to be at least like 31 cents. I can see here, I can tell right now that we're probably coming into earnings. Let's take a look. See how the volatility, which is a direct correlation to the price of options, by the way, this volatility is super high and then it just drops off. That means we're probably we're coming into earnings this week. Like, I'm not sure when they are. Let's take a look at the chart. Let's see. On the 3rd, so is that Thursday? So coming up, which means that I'm going to collect quite a bit of premium today, more than I normally would. But it also means that the stock has a very good chance of moving significantly compared to normal times. And, the options price that in. All right. So I want to get out of the money on a put, as far out of the money, but I still want to collect at least 30 cents, 31 cents. So right here, 27, I could do the 27. I could go all the way down to 27. What I'm going to do is I'm going to come one back and I'm going to go to the 27.50. So I'm going to collect around 40 to 44 cents. I could collect $1.40 and still be out of the money, or even $1.60. But I'm going to be a little more conservative in case I get assigned. And just think, I've got to put right here at 25, really close to this 27.50. So the put hedge gives me much more protection down in here. So I'm going to sell the 27.50. Now, how many am I going to do? Well, I have between $5 and $10,000. So I'm going to do one contract on the wheel. So what did I say here? 27.50. So I'm going to sell one of these. Mid price 41. Maybe shoot for 42. Maybe I get a price for $42. Yeah. Okay, good. Got filled there. So now I have my wheel in place. I'm also coming into earnings, and I have a really good, strong protection, considering that I'm possibly short at 27.50, and then I'm only at $25 where my three put hedges are. So it'd be nice if DraftKings went down to like 20 or something crazy like that, 15. That would be nice. I'd collect this put hedge would pay off. Or if it goes higher, um, I just collected, $42, and I just get to keep that. Okay, let's make sure. I'm going to go over my notes here to make sure I covered everything. Also, if you follow me on Twitter right now, you'll see the trades that I make. I might not be showing my trades on Twitter in the near future, but I haven't changed that yet. Also, make sure to hit that like and subscribe button. Just reach over with your mouse right now, hit that like button. That would really help out the channel. It'll help other people find this. And I think this way of trading options, especially for beginners, is really the best way to learn right away. I understand the wheel strategy is a really good way to learn, but it's not really safe in my opinion. So the safe wheel, I think, is a really good way for people to learn how to trade options. And if you go ahead and hit that like button, it's going to help. The algorithm's going to kick in and help those people find this. Okay, let's get into any questions that there might be. Horatio, how the PL5 reacts to vol spikes without much price movement. How would it will? If the price doesn't move much, the vol spike, initially the PL5 is not going to like it so much. But then after the vol kind of settles in, it's actually going to take advantage of that and make profits. So I would prefer a vol spike to help the PL5, because eventually the PL5 is going to turn that vol spike into money. But initially, that first leg, it's not gonna look as good. It's gonna go down with the market, or a vol spike without the market moving, which typically doesn't happen. And that doesn't really happen. But if it did, then the PL5 would it has some negative vega, so it would go down. Tron, lots of vol with DKNG due to earnings on the 3rd. Yep, I realized that as soon as I started looking at the options chain. I'm like, oh, there's a lot of premium here. Okay. Neil, I was looking at how high premiums are this week for options, wondering if buying the 5-cent call shouldn't be higher. Maybe a percentage of the premium received for yeah, I mean, you could implement a rule like that, but as you can see, I went ahead and sold the, $42, so it didn't really matter. As far as that ratio, I still kind of kept that ratio clean because I went so far out of the money with my premium. But if you wanted to sell something closer to the money, collect a lot of premium, and then buy a call closer to the money, pay a little more for that call, eh, something that needs to be back tested, but probably not a bad idea if you wanted to make it that way. So Walter, so if the put hedge is under 70% of premium, so not of premium, but of the price of the stock versus the strike price, the algorithm says roll it up, or the rules. Is there a time when you are so well protected that you receive premium, that you recover premium by rolling the put hedge down? Typically, if I get to a point in the safe wheel where I am close to the money or in the money with the put hedge, that means I have a second tier on typically. And if that happens, I don't adjust my put hedge. I let it work and I want it to hit profit. I want the put hedge to pay me. So I don't play with the put hedge once it starts becoming in play, let's say. Let's say it's in play. I don't I don't change it. I don't adjust it. I don't even if it's 100 under 100 days, I don't move it because it's in play. So I don't mess with it. Some guy, Carl, can you post your updated spreadsheets for the earnings edge into the course? I get different average win loss figures based on the version spreadsheet I have. Um, yeah, let me write that down. Yeah, I can put that in there. Okay. Tron, what strike did you buy on Friday for the weekly call? 46. Yeah, it's way out there. I had to go way out there because of the high premiums. So the put hedge is really not as well protected, coming into this earnings, definitely. What strike did I buy on Friday? What could I buy today? Today, what could you buy today? Probably something really far out there like I did. 44, possibly the 43. Yeah, there's a little bit of risk coming into earnings as far as if the stock just gaps higher. Your put hedge could lose some decent value. It's currently marking at $1.57. So I mean, we get a real strong high up move, this thing could go down to 80 cents, get cut in half. That's just the risk, some of the risks that you take. You can see it's up like $72 today. That's a pretty big move down. All right. Less is more. Can you describe the difference between the PL5 and level 5 trading system? So, level 5 trading system is a better description would be level 5 trading systems. So, PL5 is a level 5 trading system. The safe wheel is a level 5 trading system. Um, earnings edge, not so much. That's more of a binary event kind of thing. But basically, what a level 5 trading system is we realize that selling options does provide an edge, right? So we know we want to sell, but the problem with that is when the market crashes, you get burned, you get beat up really bad. So you want to be hedged. So if you're selling premium and you're hedged, there's your level 5. It could be any kind of system as long, that's what a level 5 system is. So the PL5 falls into that range. Okay, Alex. What do you think of selling a new put on Friday if expiring put isn't far out of the money within the last trading hour? Take advantage, more premium. Okay, so you're talking about like a zero DTE kind of situation. Really, is that that's the way I'm reading this? Um, yeah, well, actually, at that time on Friday, I think the volatility is going to be crushed out of the system because the earnings come in on Thursday. So there's a little bit of a disadvantage there because you really won't be getting a lot of premium. All that premium will be sucked out of it. Not all of it, but a lot of it. And I think that's more of a zero DTE kind of play and kind of a binary event kind of play, which is hard to hedge. I mean, I'm just giving you my thoughts off the top of my head. I mean, a call spread might be something else, a little less risky, might be an idea, but would need to be back tested. And so you'd want to go in and back test what happens after earnings, the day after earnings, and it happened to be expiration day, zero DTE. So it's kind of rare to find that because then you're going to have to find trades that report on Thursdays or maybe Wednesdays. But it would take a little bit of time to weed out and filter that this certain scenario on a consistent basis to back test it to see how that would play out. Because I always want to back test first. Always back test before you play. Neil, I was reviewing old YouTube on the 5-step course. Do you know why its actual performance did not live up to your backtesting results? I think it had to do with uh, the spread of the backside, and the spread is certain points wide, and the that width isn't necessarily moving. The width isn't flexible with the market, and the market moved up significantly. Um, the market price of SPX is probably twice as high as what it was before, which has an impact on the width of that spread. And I think that's what it had to do with. And if I didn't explain that in detail enough, I guess maybe ask it in a little different way. Tron, I'm still a bit confused regarding buying the call on Friday. I understand that things can happen over the weekend when we discuss this. I thought you had other concerns purchasing on Friday. I think the other concerns I had wasn't purchasing the long call on Friday. The concern I had was trying to roll the short put or the covered call on Fridays because I needed the short put to get me exercised, or I needed the long call to take me out of the stock. So I couldn't really mess with that on Fridays. I needed it to do its thing at expiration. But as far as the long call, that's a totally different thing. So I was able to move that to Fridays. I hope that makes sense. Will, I always buy a call worth 20 to 25% of the money I will be making selling that put, but that means I have to wait for Monday to buy it. Yeah, so Will trades this a little bit differently, which is cool. He'll take in more premium on these days, on these weeks of that we're having the binary event, and then he'll pay more for the call, which is cool. And how's that been working out for you? I think it kind of sometimes it works, sometimes it doesn't. It's kind of 50-50 would be my guess. Avery, what if you sell the 7 DTE put on Fridays instead of the 4? Yeah, I just explained why, because I need the assignment to occur. I need that put or covered call to play out in order to get assigned the shares or to get called away from my shares. Okay, listen some more. Sometimes the 5-cent call hedge spikes up in price midweek, but then falls back to zero by Friday. Any thoughts on taking the profits midweek? No, it's really just there as a hedge, and in case something crazy happens, like let's say DKNG gets a takeover bid and it goes from 31 to 60. Well, you want to be holding that long call. So that's really the main purpose of it, not to kind of make, 15 or $20, even though technically the thing hardly ever pays off. And when it does, it's maybe 15 or $20. But we really haven't experienced that crazy one-time event, which is going to happen, where, one of these stocks is going to get a takeover bid and double in price, and that call is going to pay off and probably double the account. So we'll have it in there for that. Tron, I think one of the filters for picking a stock is earnings, but I guess when you're already in the trade and earnings is happening, we just write it out. Yeah. So the main reasons why I don't like earnings uh, coming in to earnings when I'm opening up a new position is the put hedge. I think the put hedge could be overpriced just a little bit, not significantly. It's not a big deal if you do it, but the put hedge, you don't want to overpay for it. We obviously didn't overpay for it. We bought it, I don't know, a month ago or whatever it was. Could have been longer. So earnings weren't really taken into consideration at that time. So, and it really doesn't move too much anyways due to earnings. but it's just kind of a little rule I like to use. Kind of avoid overpaying for that put hedge by looking and seeing when you're opening up a position, whether you're coming into earnings or not. Well, I'm a little sloppy and have made mistakes, but I'm losing $30 on DKNG since we started it. Hopefully, it works out this week and I'm back near what you've made. What have I made? Let's see here if I can find it. Profits. Oh no, I'm down $74 year to date. Well, year to date, but I probably made. I don't know if I made money at the end of the year last year on that. Yeah, have we been trading this for a whole year? I don't really pay attention to that. I'm just, am I in a stock that works? And then is my put hedge? I just ask myself questions every week. I don't really think about the past in terms of, how has DKNG done? But yeah, you can see that this year, uh, still down. I would love to get assigned and then sell some covered calls and then get pulled out of DNG and being protected the whole time while I'm doing that with my put hedge. So there's almost very minimal risk. So I'm actually looking for DKNG to kind of fall. I prefer that it falls after earnings. I think that would be more beneficial. But if you sold a put close to the money and collected a lot of money, you probably want it to go up. Without some personal mistakes, I would have been in the green. Okay, good. Thanks, Will. Just on DKNG, but overall with a safe whale, I think you're ahead. Thanks. I'm trying to decide whether or not to sign up for the 5-step course. Yeah, if you want to learn how to the PL5, it'll help you learn how to be a level 5 trader. The safe wheel course is also a really good way to do that too. But it's not the 5-step course will really get you ready for the premier level 5. The safe wheel doesn't necessarily get you too ready for the PL5. It does kind of take you in a step in that direction, especially if you're like what I would call a white belt, right? If you're a white belt, yeah, the safe wheel is like perfect for you. Okay. Walter, the 5-cent call hedge must have paid off during your back test. Um, Not overall. Like if I were just to take that 5-cent hedge and just like isolate it, that thing did not make money. But again, I know what can happen. I have seen takeover bids happen and I've seen stocks double overnight. And I want to protect that put hedge. But yeah, overall, I don't think it has paid off, to be honest. If I could look back, it's just a thought, though. I haven't actually gone through it, but I'm pretty sure it has not. Tron says he's down a little bit too. I'm on DKNG. I'm sure you're talking about DKNG. I think buying one at the money put and far out of the money put instead of 3 puts, same strike. Um, might work, but the thing is, what my goal is to make sure that the stuff that I'm selling, see this $42 that I collected today, that outpaces the put hedge, and also makes me a little bit of money. So if you did stuff at the money, you're kind of competing. If you were to take your put hedge at the money, um, you're going to get a lot of depreciation. Walter, I've been exiting the long call hedge weekly at 5x profit. So you have like a set GTC or an order ready to take the money. So you are taking the money. So that's like $25. Okay. I mean, that if you did that, you might come out ahead, but you're not protected for that big move, which hasn't really happened yet. It will one day. Whoops. Walter, do you still follow David Jaffe? Oh yeah, I when David Jaffe releases videos, I watch his videos. Charles says David barely even trades in real life. I wouldn't. I don't follow his alerts. I don't know exactly how many, what his occurrences are. I don't know. Will overall on the safe wheel, I've made 14%. That's better than the S&P being down since we started. That's outperformance by about 17 to 18%. Neil says we started DK back on 6/12 today, so 6 weeks ago. Okay, so we got this put hedge 6 weeks ago. Okay, so it wasn't really looking at when I put it on, it wasn't considering this week. You know, it wasn't, the price wasn't inflated. Some guy, the call, it only happened once, black swan and all that. Yeah. And I like to be prepared for the black swan because that's when everybody loses money. Everybody thinks they're great traders or they're making a ton of money and all that. And then the black swan comes and then they lose it all. They lose like 3 years worth of trading. I don't like that. I look to avoid that. Philip at will match over how long or per year? So he's asking you last summer, so about a year. Yeah, so about a year. So that's even less than the year and a half that it's been since I started trading it. Yes, thanks. Okay. Safe Whale works. I'm currently in INTC doing it. Oh, that's cool. Keep us updated on your results with that. Some guy, David Jaffe, has a new premium alert service for small accounts. Like he is feeling the pressure from the Dom. There's plenty to go around, I guess. Um, yeah, maybe he is changing his model a little bit. Walter, some guy, yes, fat tail like Nassim Taleb, but hard to trade since you lose 99% of the time. Yeah, yep, that's a Nassim Taleb kind of thought process. And one of the things he talks about is, those fat tails that are supposed to come up once in a lifetime, they come up like once every 5 years. So yeah, they come up a lot more often than people think. Less is more. Is the bull market run lowering the safe whale profit potential currently? Seems like it since we've seen drawdowns and big drops. We haven't seen any drawdowns or big drops in a while. I would agree. Yeah. Um, I was talking to the shovel, and he said that since March, the S&P is up 20%. I haven't ran the numbers, but that's a huge run. And probably the safe wheel does better with more volatility and kind of more of a down, when you get these normal down moves, usually you get these 5% down moves every quarter or twice a year. We're not seeing that. We're not seeing that at all. So maybe that does have an effect. But this thing is built for all market environments. Obviously it's going to do better in some environments versus other environments. Walter, the model tails are too thin. The fat tails are fat because they happen more often than what the models predict. Yep. Makes sense to me. Okay, any more questions? I don't see any more comments or questions. I like to always say when I come to the end of the broadcast. Oh, wait, here's Neil. One more. My experience with trading the safe wheel is I'm up $600 since I started trading it from its inception. Okay, great, Neil. Appreciate the input. All right, I'm going to kind of close this thing out, but I always like to say if the P&L is not real, what else are they trying to conceal? I'll be back next week.